And now let's talk about cross-selling. If the service isn't right for your more affluent customers who have the propensity to buy the additional products that you're probably going to be selling, why would they stay? Those three first aspects, pricing, distribution, and service, will actually be at the forefront of getting things right for the consumer. And the consumer doesn't have to be a personalised customer. It can be whoever it is. It can be another Takaful company buying Retakaful. But those three aspects have to be right. From there, we move on to consumer protection. The regulators have to also be involved with getting the consumer protection in place. TCF is something that's very much synonymous here in the UK. The FSA has drilled it home to any regulated insurance company, Takaful company, any regulated financial institution. Yet, is there something of the like globally available that all regulators actually look at? The answer is no. But consumer protection has to be there, especially when you're talking about an industry that is still in its infancy. It has to be there. Who will customers go to if they make a claim or they have to engage with their Takaful company, Retakaful company, and there's a disagreement? Who will they go to? Again, TCF needs to play its part. A consistent regulatory regime. Yesterday we talked at Norton Rose, at the masterclass, we talked about passporting. Well, that's certainly available in the EU, but why can't it be done in the GCC? Why can't it be done within continents? And again, this is something that needs to be looked at. If you have a successful Takaful operator in one regime, why can't it be passported across into another regime? Especially when you look at the GCC as being a group. It's a group of countries. So why can't you do that there? Why can't a best practice Takaful operator in the UAE or in Bahrain simply be able to go and set up in Kingdom of Saudi Arabia or in Kuwait or in Oman? These are things that will help the Takaful industry, and the regulator needs to play their part. But it's not one regulator, it's the collective of the regulators that need to play their part. Shareholder expectation. It was almost fashionable in 2007 and 2008 to set up a Takaful company. Some shareholders went in with unrealistic expectations. Shareholder expectation has to be correct from the onset. If you're going to get involved with Takaful, don't expect a return in the first 2, 3, 4 years. It's unrealistic. You're in it for the long term. You have to be in it for the long term. Shareholder expectation has to be managed, has to be correct from the onset. Otherwise, shareholders will get frustrated. Otherwise, the senior management will get frustrated. And it will just make things more difficult. Larger diversified Takaful pools. What do we mean by that? A number of Takaful operators who offer different products hold different pools, hold smaller pools. Now, when you're talking about Takaful and you're talking about surplus distribution, and you're talking about sharing risk, remember it's about sharing risk. Actually, the larger the pool, the more diversified your risk base. The more diversified your risk base, the greater the likelihood you're not going to be in deficit at the end of the year. So companies, Takaful operators, need to look at their models and they need to understand what is the best way of managing the risk, sharing the risk, and actually being in a position where they are actually going to be able to make a surplus distribution. Even if they can't make a surplus distribution, actually, they should be aiming to break even. At the moment, where you have multiple pools, it does make it harder. And probably the biggest aspect is consumer awareness. Now, everybody in this room is well versed with Takaful. But we shouldn't take it for granted that the public is. And again, this is an industry that is still within its infancy. And we need to help consumers at all levels, banking professionals at all levels, help them understand what Takaful genuinely is, what the concept is, how it works, and why it's different to insurance. We see great successful bank assurance models in the UK and in the US that can very easily be replicated in in the GCC, far Muslim countries, and where we've talked about Africa, for example, where the distribution is going to be a challenge while technology is developed over there, it has to be done through a bancassurance model or a brokerage model. Again, consumer awareness has got to be put into place. We have to invest as an industry to letting the consumers know what Takaful is, why it's different, and what are the virtues of Takaful over insurance. Those are some of the aspects. There are other aspects as well we've touched upon. Asset management. We need to have strong asset management companies. The capital markets industry has to grow as well. As soon as you start growing your family Takaful book, you have a large capital base there that's sitting there waiting to be invested in Sukuks or other long-term investment products. These all have to be developed. These are all going to play their part in the success of building the Takaful companies, building the Takaful industry. All of that will together bring credibility, belief, and growth, and sustainable growth. We're seeing growth today, but we want sustainable growth. And the challenges for the Takaful operators, I'm not going to elaborate too much on this, but again, I'm reflecting back on the World Takaful reports. A lot of the senior executives we've engaged with talk about competition, talk about underwriting performance, socio-political uncertainty, many of the aspects that Alberto's already alluded to. These are aspects that actually are, some of them are unique to the Takaful operators, but not all of them. A lot of them will also overlap with the conventional insurance company. And this then goes back to the transforming operating performance theme that we had for this year's Takaful report. It's really important that if you're a Takaful operator, your business is fit for purpose as well. So not only are you actually evolving the Takaful industry, you're also making sure that your own business is fit for purpose and moving forward. And just as Lord Shaker said, manage your costs. Spiraling costs will actually break your business quicker than anything else. Manage your costs. There are a number of strategic issues, and I'm going to, again, not elaborate too much on them, but they are in the report. Please do have a look at the report. But it does come down to we all have a part to play. We all have a part to play. Whether we're a regulator, whether we're a consumer, a shareholder, or a Takaful operator, we all have our part to play, and everybody in this room has their part to play as well, even if it's just as much as talking to somebody, letting them know what Takaful is. There begins the consumer awareness program. And I'll conclude there. There are a couple of other slides, but you can see those when this presentation is shared. Thank you, Alberto. Thank you very much.